Thank you very much. Hopefully you can hear me. Congratulations to my fellow contestants. Thanks for being here. And thank you to the attendees and the judges for your commitment to FinTech and entrepreneurship. Time is valuable and I know I appreciate it. My name is Dinesh. I'm co-founder and chairman of FundMore.ai. Last year, according to the Federal Financial Institution Examinations Council in the US, 340,000 mortgage applications were completed and didn't close. The cost of these applications was on average $9,000 each. I think everyone on this call probably knows someone who's had a bad mortgage experience. I want to introduce you to a couple of new Canadians, Savvy and Narayan. They are successful, they have cash in the bank, and they're my parents. They've come to this amazing country to make it a better life, and that better life starts with a home for their family. Dad calls the Royal Bank and is told he doesn't have a long enough credit history here in Canada. He then calls his mortgage broker, who asks for a whole bunch of documentation that he's just not familiar with. He goes back and forth with the broker and multiple lenders, days and weeks go by. Eventually, he's frustrated, he's confused, and he cancels his deal, forgoing his deposit, and in the process puts his family in a difficult place and loses a significant amount of his savings. And I guess the worst of all is loses some confidence in his choice to come to this country. And here's the rub. The lenders that he was working with, both the banks and the brokers, spent thousands each trying to qualify him, and in the end didn't get the mortgage. In fact, they lost a customer who had never missed a payment in nearly 50 years of homeownership, would eventually own 8 houses in his lifetime. FundMore.ai is a machine learning-based platform for the processing of mortgages. It transforms a process that on average costs $9,000 and takes 2 man days of work to complete to a simple, user-friendly interaction that costs hundreds of dollars per completed file and can process an application in under 10 minutes. So how do we do this? Well, we have an obsession to simplify process and leverage technology. At the core is faster, better decisions. It starts with direct from source document collection and cross-referencing for fraud and errors through integrations. Our machine learning-based document import and decision-making support framework ensure that the lender's funding criteria is met every single time. And in addition, for the borrower, we have a consumer-friendly mobile application that makes the collection of documents easy and painless. We go deeper than a human can. We cross-reference borrower supply data with independent third-party data for income, identification, property appraisal value, etc. And this creates a true 360-degree picture of the file. Finally, our advanced risk scoring mechanism uses algorithms to predict future debt service problems. We take into account present and future market data for employment, property, income level, and consumer behaviors to try to reduce loan default risk from macro factors. Getting a mortgage is complex. Our team has funded hundreds of mortgages. Our software takes a complex process and makes it transparent to the borrower. Our mobile solution makes collecting documents easy and is designed out of the gate to be contactless. At the same time, our robust algorithms ensure accuracy and traceability, so our lender's risk is managed and reduced. This is a large market and competition will be fierce. Companies like Ellie Mae AIQ, AI Foundry, and Zest.ai are with us at the starting line. And we've spent 3 years getting ready to compete through direct and OEM go-to-market strategy that targets lenders and brokers. What is clear is that the winners need to scale quickly and will be measured by their ability to check every box in the complex mortgage process. There is $63 billion spent on mortgage processing annually. Market dominance means easy applications for borrowers, speed for underwriters through decision support, and default prediction for lenders for future macro loan risk. How much is all this automation worth? Our initial customers are mid-tier mortgage lenders. The largest cohort of this client profile does roughly 200 files a year. This means that if these lenders use FundMore.ai, their annual cost could potentially reduce from $1.8 million to $200,000 per year, a material savings. Chris, Daryl, Jen, and I have been at this for more than a decade. In the past 2 years, we've some of the strongest voices in the industry working with us to prove out the platform, validate our business model, and commit to using our technology. Our team of 13 is currently in the pilot phase of the technology and expect to be cash flow positive in 9 months. We have a strong pipeline of over 20 lenders who have expressed an interest in the platform and who cumulatively fund over $1 billion in mortgages annually. Between us, this team has over a century of experience in mortgages, real estate, and technology. I personally have founded and led multiple companies, having created over $1 billion in shareholder value over the past 20 years. COVID has forced the greatest move to digital since the internet revolution last century. FundMore.ai is uniquely positioned to take advantage of this digital transformation in the mortgage sector. Our contactless business model, experienced team, and combined machine learning-driven technology and mobile platform place us well ahead of our competition. We are currently closing a friends and family round and looking for strategic advisors. If you're interested in being part of our story, please reach out and let us know. Thank you very much.
Thanks, Dinesh. That was a good presentation. Can you tell me a little bit more about your market focus? Are you predominantly going after U.S. mortgage brokerage businesses, or are you working in Canada, or where else are you working?
So there's two-phase approach. Phase one is to validate and increase the confidence level in the algorithms. And so we've picked the Canadian market to pilot that. There's roughly 300 what I would call tier 2 lenders in Canada. Those are mortgage investment corporations, credit unions, trusts, Schedule II banks. And so the idea is to work with those, continue to increase both the accuracy and confidence through optimization of the algorithm and increasing the amount of data. And then once we get that done, which we expect will take another year, we're already at 85,000 documents through the platform. We're looking to, get into the million range by next year, and then push into the US. I have extensive contacts in the US financial industry, and my goal is to try to work with those to try to find a US partner. Regulation in the US is substantively different than Canada, and so therefore you need to have a US mortgage partner to be able to properly underwrite in this area.
And can we just revisit the unique kernel or the piece that makes you stand out above the noise? There's a ton of people going after, obviously, mortgage application automation. It's a very busy space.
Yep.
A lot come through our shop, but what is it that's really appealing or differentiated that makes you stand out or helps you win?
So we're end to end. So we have a consumer application for the intake of applications and the intake of documentation. We have a mechanism for actually document extraction and metadata addition, augmentation. So that allows us to really get beyond PDFs and those kinds of documents. And then last is our NLP focused around around machine learning. So we're really doing a lot of natural language processing around the application and the support documentation, and then setting up our FundMore score so that there's two elements. The first element is around matching to lending criteria, and the second is around prediction. So using non-traditional data sources like social media, like Stats Canada and other places to be able to predict future default risk, which I think very few people are doing.
Okay, thanks.
What do you think that will make you stand out? I know it's a repeat question from Dave, but the Canadian market is still a pretty virgin on what you're offering. The US market is a bit more mature. There's a few, 2 or 3 big companies coming out of San Francisco that has been doing this for a while. How do you think you'll be able to displace them on the US market?
Yeah, it's a very, very hard question. The reality is that none of them, the US guys, are interested in Canada. So, that's why I said it's a 2-phase approach. I think you could make a very successful business in Canada, but that's not necessarily a global player. So where my expertise and this team's expertise is to build a cash flow positive business that has the fundamental technology, and we are deeply connected to the Canadian mortgage marketplace. We believe that can take us to 30 million in revenue. And with that, we will have sufficient traction to bring in the appropriate venture capital to help us scale and differentiate with US partners.
What do you see the main difference from the Canadian and US market on the mortgage side?
Regulation is different. That's a big one. The US has started a process of national regulation where you can have a brokerage license at the national level and then operate in all states. That's not true in Canada. You need to be licensed in every province in Canada. So that's a major barrier to national expansion in Canada unless you have that kind of infrastructure. One of the things we've done is we've actually, for our team, we actually get our team licensed in each jurisdiction we're operating. So that's one of the ways that we're trying to build a barrier to US entrants coming into the system. The other major thing I think is in the US market is that the markets are the individual transactions are smaller. So you have smaller transactions in the secondary markets, and in the primary markets, they're very large transactions. It's a $1.8 trillion market in the US. There's lots of space for people, right? And this is the thing that I think for us as a service provider is the competition will happen at the lending level, not at the infrastructure level. There's going to be a lot of room for software providers, and we're going to focus very tightly in the mid-tier, and we're going to look at those people looking to fund second, thirds, and fourths, because that's where underwriting gets really complex. And when you're in that space, there's a lot of the people providing those mortgages are not, those aren't your big five banks. Those are people who are have private money, who are syndicated, and may not be, they're using their lawyer to support the underwriting process, which is why the cost is so high. So I think that there is a great differentiator there in that very targeted niche, which will allow us to scale nicely and potentially an exit to a larger player.
Dinesh, that last point.
Thank you, Dinesh.
Yeah, and that last point you made was very helpful. I'd almost bring that forward because that just right away it puts you in a separate bucket. You TAM that thing and box end it, and then people understand what you're doing and why it's different right off the bat.
Okay, thanks.
Otherwise, it's very noisy.
Thank you very much. I'll make sure we make that revision.